Is the worst of the housing downturn over for Sydney and Melbourne? Hi, Nero here from Investment Rise, and we've had some further good news for property investors with the Reserve Bank of Australia giving us a second rate cut in as many months. And now we're seeing some data that shows that the Sydney and Melbourne markets, for the first time in 2 years, didn't have a price drop for the last month. In fact, there was a slight uptick of 0.1% for the Sydney market and 0.2% for Melbourne. So what does this all mean for our two biggest markets? Well, I know that there were so many people out there who were saying that the two biggest markets that were going to crash, sell your property and run for the hills. And I know that I came out multiple times on many videos and said, look, the two markets are not going to crash. I know I got a lot of hate for that, but we can see right now that our two markets have not crashed. Although they've fallen a fair bit, yes, they haven't crashed, and we're starting to see some resilience. But what do I expect going forwards? Well, I think the first thing you're going to have to do is be very cautious, because the data we're seeing is what they call aggregated data, which means when we're talking about a 0.1% uptick in the Sydney market, what they're saying is they've taken all the suburbs and they've just worked out that the average growth across all the suburbs works out to be 0.1%. So what that could mean, for example, is say we take two suburbs. One suburb, for example, may have dropped by 10%. Another one may have dropped by one may have dropped by 10%. The other may have increased by 10.1%. Therefore, the median growth rate or average growth rate is 0.1%. That's how a lot of this data is reported, and that's a very simplified example. So we need to be very cautious. We've seen some suburbs like Ryde and Epping drop over 20%, still have huge oversupply issues also in the Northwest Corridor. So what I would suggest is going to happen is, yes, I believe the worst of the housing downturn is over for Sydney and Melbourne, but prices I expect will still keep falling. However, the rate of decline will be less, which means that prices won't fall as fast as they have been. They're going to start slowing down in terms of how fast they're falling. We are approaching the bottom of the market, and then what I think you'll see is a long period of flatlining as the market readjusts, because we still have all sorts of issues with weakness in the economy, really poor wage growth. So I think you're going to see that the market's not going to crash, as you know, I've been saying that for quite some time, but it's going to go flat for a while as we kind of need to adjust and fix some of the economic strength issues that we have. We've got a pretty weak economy, as you've probably seen in all the various reports in the press. So yes, Sydney and Melbourne markets no longer expected to nosedive. Yes, many areas will still fall further a little bit, so be cautious in your investing, but certainly don't expect a massive run on prices and prices to start growing in those two biggest markets. We still have affordability issues, we still have oversupply issues, and the biggest thing is the lending constraints from most banks still hasn't been eased, which means it's just as tough for investors to get loans as it was even before the two-hour rate drop. So be cautious with your investing and still apply the basic fundamental capital growth criteria that we talk about to ensure that you're making the right investment decisions. Really hope this video helps. Let me know what you think in the comments below, and if you think it could help someone else, please share it. Bye for now.